Happy New Year, one and all. Welcome to today's video. Hope you had a great New Year, by the way. I have two pairs on watch today, and those are Euro dollar and pound Kiwi. So I'm going to break them down for you now. I didn't have anything on watch yesterday because, well, the market was pretty much closed. It was a bank holiday, I believe, New Year's Day, the start of 2024, a bank holiday, I believe, in pretty much every part of the world. So I believe it's a bank holiday today in Switzerland and Japan. So that may affect, as we go into the London session, the bank holiday in Switzerland may affect the liquidity during the London session. But without further ado, let's break these pairs down for you now. So my favourite of the bunch, one which has to be said doesn't look likely to provide an entry, but as I've said before, it's not for us to say what the market will and won't do. It's just for us to present ourselves and be available if the market does what we need it to do for our entry criteria to be met. So I don't think euro dollar is likely to provide an entry, but who knows? I think more likely is pound Kiwi rather. But without further ado, let's break these down. So if you've been watching my previous videos, you will know that I was looking at euro dollar on the higher degree, on the longer term perspective for a move to the upside, because we have this 1, 2, 3, which taps into this last exchange of liquidity here on the left where there was volume. Okay, there was an exchange of liquidity, the last area of volume that I could see. So it would make sense for anyone who caught this sell longer term to be getting out, anyone who was riding this wave down here to be getting out of their positions here. And for the bigger players, perhaps the same people, if they were flipping their bias, to be getting in here. And that's exactly what happened. We had an exchange of liquidity at that area there. Okay, we break, as we often do on the higher time frames, we break just below it. Okay, catch people the wrong side of the market who believe what was previously support becomes resistance once it's broken below. The bigger players see this as a discounted price. It moves up. Okay. We then tap into, as we move up here, we tap into this exchange of liquidity by way of a 1, 2, 3, which are the structures that we typically see. The second touch breaks above the first touch, but fails to tap into the exchange of liquidity, where once again there was volume. Okay, the third touch of this 1, 2, 3 touch structure breaks above the second touch and taps into the exchange of liquidity, and then moves to the downside. We hit the base of the piece of structure, which is what we call the 90% rule. We tap into that. We break just below this wick. Okay, as well. Okay, discounted prices once again. We move up. So now we're zooming in. So at this moment in time, there is no need for us to come all the way back down to here because we've already tapped into that. And there's no need for us to come down here because we've already tapped into this exchange of liquidity here. Okay. So then I zoom in. Okay, you can see last week we had this kind of bullish high test. We do have to be mindful of the fact that these bullish high test candles here can be filled, particularly as we get closer and closer to a high such as this. So we've pulled back a lot of this move now. So the more of a move we've pulled back, the more likely it is that these bullish candles can actually get filled. Okay, and then we end up pushing all the way back up to test these highs. Okay, so I'm mindful of that. But as I drill down, you can see here, what have we done once again? We have the same kind of psychology going on. This high taps into this high, but it fails to tap into here, this area here, where there was an exchange of liquidity. This high breaks above this high and taps into the area of volume and then pushes down. You can see we've got some aggression and we're trading back below here. However, because of what I just said on the higher time frame, it's possible, that we could have something like this, where this becomes a bull flag to push higher, and then we end up retesting this high here and pushing up to take out this high, or potentially that higher time frame direction kicks in, and this gives us enough volume to push higher, because as I've said, we don't need to come all the way down to test these lows. So these are things that I'm factoring in. Okay, so just a bit more neutral on this one at the minute. Okay, and you can see that that we've moved down a little bit more slowly than we moved up. Okay, so these are things I'm factoring in. As I drill down to the 4 hour, you can see we have overall, this is, if I just use the bars pattern tool, this is a pretty corrective move down. So because of that, because we haven't impulsively moved to the downside, I wouldn't be surprised, as I've said, if we end up getting some kind of bull flag to push higher, where we kind of tap into the base of this volume here, and then we end up with kind of this structure to push higher. So we're always analyzing, those of us who trade the Falcon strategy, how price has done something rather than if it's just done something. I've seen loads of posts, and you'll see this a lot on TradingView, where price will just smash to the downside, tap into an area like this, and then people just start getting long, and it's like, well, look at the momentum coming down. They're not analyzing how price has done something. They're just looking at what price has done, and then they'll just literally get long here, which is like the epitome of catching a falling knife. That's not what we're doing. I'm analyzing how price has moved. So because of all of these factors, I want to see a dropout. We're not seeing a dropout. I want to see a push down followed by a flag to confirm the idea, to confirm the short idea, right? And the impulse down, I want to see an impulse down followed by a correction, and a correction which I can actually separate from this otherwise corrective move down. Because otherwise, if this is just corrective and we get kind of some kind of correction like that afterwards, I can't really separate it from this. Meaning, as I've said, that I could be tagged in, tagged out, and then price to something like that, comes back down, and then we have something like that, and then it pushes up. So I want to see something that I can separate. I want to see a clear dropout, followed by something that I can separate, and I'm not seeing that at the minute. So if I don't see that, then I'll not be looking to place a trade. But if we do get a dropout followed by a flag, then I would be looking to get short into this low here, for example, where we had a sharp exchange of liquidity, suggesting that there may be orders here, and that this may be just a little short-term move that we can capitalize on. Because if we just flip to the DXY, which is the inverse of this, my thinking was, see, we're approaching what is my area of value there. So one of the reasons that we may be moving down correctively on euro dollar is because this is, as I anticipated, the area of value on the DXY, meaning that we end up rejecting from here and plummeting to the downside, okay, or forming some kind of larger flag like that to tap into that to push lower. And of course, if that was to happen, then what I'm anticipating on euro dollar would not necessarily shape up. But the reason I've got the reason I'm looking at the forecast that I am on euro dollar, is because potentially this, based on how the weekly was looking when I did my forecast, okay, it was looking like potentially this may push, the DXY may push a bit higher to potentially tap into that high there, this exchange of liquidity. And of course, if that was to happen, then what I was looking for, and what I will be looking for today on euro dollar, would be more likely to shape up. So this was just a little bit of a hedge play, really, on euro dollar. But as I say, it doesn't look like it's shaping up now. So if the DXY does reject from where I'm anticipating, then it's likely that euro dollar will start. We may, for example, push down to the start of this correction, and then we may see an aggressive move up from there as the DXY potentially aggressively moves off from there. We may get that near miss that we often see. So that's just the thought process, just giving you the entire thought process surrounding the DXY and euro dollar. If this does not shape up, what I'm going to do now is I'm going to set an alert to see if we can break below that correction there, because I can't separate this correction from all of this. And if we do not break below there, then I'll not be looking to place a trade. So that is euro dollar. That is the thought process. Let's move on to pound Swiss, pound Kiwi rather, which is a lot more straightforward. So on the higher time frames, you can see that we have we have broken above here. I've just cut through this because it is a bit of a volatility wick. If we just, every time frame that this wick is visible on, it doesn't look, it just looks like volatility. It doesn't look indicative of the sentiment of the market. What we're trying to do by way of the structures that we look for is we're trying to identify the sentiment of the market. Okay, now we have a wick here, a massive wick here, a massive wick here. So when it's just a massive wick on all time frames, that gives me a clue that that is just volatility, and we can switch to the line chart. And if we do, you can see that that wick does not appear as well. So I'm not convinced that that is indicative of the sentiment of the market. So if that's not, if that wick is not indicative of the sentiment of the market, what does that mean? Well, that means that we have a similar structure. Again, we have this high here, which breaks above here, but doesn't tap into this high here. We have this high, which takes out this high and taps into that area of value and then pushes down aggressively, okay? Meaning that we've potentially done enough, okay? So as I drill down, you can see that we've had a solid monthly close, which closed below here. That is a factor. That's a tick in the box. As I drill down, you can see that area of value there. How did we move back down? We aggressively moved back below. How much have we pulled up? We have a bit of a sharp pullback here, but how much did we pull back? We pulled back 50% of the move, which is absolutely fine, and it's not uncommon for pound Kiwi to pull back to around the 60% mark. So I'm satisfied that the sequence is good. Okay, we're correcting below this low, which is good as well, suggesting that we may be pulling up here to kind of retest the back end of this before taking out here. If people are shorting this, where are the sellers likely to be getting out of their positions or taking profit? I would suggest down to here. And if we were to zoom out a little bit further, perhaps all the way down here, but certainly on the weekly chart, this would be where I would anticipate the sellers getting out of their positions. Okay, so that is the higher time frame thinking. You can see, you may be thinking as I drill down that this is a reversal structure. Okay, well, if this is a reversal structure, what is it reversing from? There's nothing on the left. Okay, so at this moment in time, I'm not convinced that this is a reversal structure. And if we just drill down a little bit further, so we can see, I'm looking at the sequence now. We are trading, just to touch on it, we are trading below this, all of these highs. Now we're below here, we're below this high, this high, this high, and of course this high as well. So it makes sense that we may be coming to the downside to potentially take out this low. And certainly, and even if we stalled down here, for example, if there was some profit taken there, there would still be enough profit potential down to there that we could capitalize on. If I just zoom in a little bit further. So as I said, although this looks like a reversal structure, what is it reversing from? There's nothing of significance on the left, okay? So what are we looking for with all of that in mind? How are we moving up? That's another thing. How are we moving up? We're moving up correctively. If this was a reversal structure, so if this was a 1, 2, 3, we don't typically move up like that, okay? We would typically react impulsively, and then we would get the tight flags and move up from there. Okay, that's not what we're seeing. So that's where nature theory and analyzing the nature of price becomes one of our biggest tools. So with all of that in mind, what I'll be looking for, and notice I've just tried to be a bit more detailed with my forecasting, what I'll be looking for, there's a prime example. Look at this corrective. This is a corrective move up. If we just use the bars pattern tool again to replicate price, that is not progressive price action, suggesting that this may be our area of value. And why do I say that? Because this high near miss to here, this high near miss to here, which gives me the clue that this is the area of value, because we've not yet tapped into that, especially when this area of value just happens to be the back end of this volume here. Okay, so we will be retesting that low. You can see, so we're well positioned. We will be well positioned for a move to the downside. And if I just analyze the sequence. So this move down, we have an impulse down. We have these little tight flag into a slightly larger flag, which doesn't pull back more than, if we just analyze this, we pull back about 60% of the move, which is fine because pound Kiwi does tend to pull back slightly more. We have a reliable looking sequence of tight flags other than this sharp pullback here. But generally speaking, this is a reliable looking sequence to the downside. So what I'll be looking for is for price to tap into that area of value, followed by a push down and a flag, and then I'll be looking to get short on the break of the flag or within it. I would filter this, as I've said here, on the 15-minute chart, and then if the tight flag was structured, I'll be looking to get short with a risk entry within the flag. If it's non-structured, if it's just consolidation, then I would look to get short on the break of the flag, and then as a first target, we would have something in the region of 8% profit, obviously depending on the size of the flag and how tight my stop loss is. So I've got an alert set. If the alert does not trigger, then I'll not be looking to place a trade. I've got it set slightly lower, my alert, because I'm just interested to see if price reacts from here. So if we get close to this high again and we start to sell off, then it may be that we're forming something more complex, and I will just take this pair off of watch. So just going to see what price does. But that is my forecast. As I said, folks, Happy New Year. Welcome to my videos if you're new. If you're not, it's a pleasure to have you back. But for now, have a great day, and I'll speak to you again soon. Thanks for watching.